EP06, Iran strikes. Market hit 5-week low, then ripped 3%. The system stayed bullish. Black Bear trading. Voice, Liam, 11 Labs. Target, Watchhawk 12 minutes. Word count, 750 educational content only. Not investment advice. Trading involves substantial risk of loss. Do your own research before making any trading or investment decisions. Jag call you why Thorfi e Bettelsener are FIBA Cummings. This morning, the United States military launched strikes on multiple targets inside Iran. Within minutes, S&P 500 futures hit a 5-week low. Nasdaq futures dropped hard. Oil spiked. And across every trading desk in the world, one emotion took over: panic. 4 hours later, U.S. Central Command declared the strikes complete. Markets reversed. Nasdaq ripped over 3%. The S&P 500 recovered off its lows. And every trader who sold into the fear? They watched the rally without them. Here's the part that matters for this video. Going into this morning, through the Iran strikes, through the 5-week low, our trend-following system by Black Bear trailing was showing HAL Confidence of 94% bullish on Nasdaq, 91% bullish on the S&P 500. The system never changed its read, not once. Today we're breaking down exactly what the system saw, why it didn't flinch, and what it's saying right now about Nasdaq, S&P, and gold. Let's get into it. Before we get to the charts, let's set the full picture for today. At 8:30 Eastern, two major data prints dropped. Producer Price Index, month over month, came in at 0.7%. The prior reading was 1.4%. The number was cut nearly in half. Core PPI, month over month, printed at 0.5% against a prior reading of 1.0, also cut in half. Unemployment claims came in at 220,000, slightly below the prior reading of 225. Labor is still holding. On any normal day, that's a bullish setup. Inflation cooling fast, jobs solid. The kind of print that gives the Fed breathing room. But today was not a normal day. U.S. Central Command launched strikes on Iran before markets opened. Immediately, S&P futures sold off to a 5-week low. Brent crude spiked. Safe haven bids flooded gold. Headline traders sold everything. Then, roughly 4 hours later, CENTCOM declared the round of strikes complete. Traders interpreted it as a signal. Neither Washington nor Tehran wants full escalation. Markets reversed. S&P futures recovered. Nasdaq climbed. Oil reversed its gains and fell back to $92.23 a barrel. Two completely different markets. Same session. And through all of it, our system was reading bullish the entire time. Here's how it played out on each instrument. Let's start with the S&P 500. We track this using the Micro E-mini S&P futures, ticker MS. On the daily time frame going into today, the picture was unambiguous. HAL Confidence at 91%. Trend integrity, bullish. HTF bias, bullish. Continuation, aligned. System ready, bullish labels stacked across the entire uptrend structure. Long entry zone, marked. The system was as aligned as it gets. When Iran strike headlines crossed the wire and futures hit a 5-week low, the daily system didn't move. HAL, 91%. Bullish. Still there, no change. This is the core concept. The daily time frame filters out intraday noise. A geopolitical event that lasts 4 hours before a ceasefire declaration is not a trend reversal. The system knows the difference. Section 3. Espatid cursors. Mies Forge and 1H on 445-2, Arsent Science 15. Now drop to the 4-hour time frame on ME cells. Here the story gets more nuanced. HAL Confidence reads at 74%. Trend integrity. Bearish. The system was in correction mode on the 4-hour. And that's exactly right. Because the 4-hour was correcting. The morning sell-off was real. The panic was real. The system caught it and labeled it correctly. This is a correction, not a reversal. This is the indication, correction, continuation methodology working in real time. The 4-hour captures the correction phase while the daily holds the bullish structure. These aren't contradictions. They're different phases of the same move. On the 1-hour chart, HAL Confidence recovered to 70%. Trend integrity flipped back to bullish. HTF bias, bullish. Long entry zone, marked. Entry at 77.94, stop at 73.01. The 1-hour confirmed the reversal and positioned for the continuation. The daily said the trend was up. The 1-hour confirmed the correction was over. That's the sequence. S&P closed up 116 points, 1.6%. The system held its red. Now let's move to Nasdaq. We track this using the Micro E-mini Nasdaq 100 futures, ticker MNQ. On the daily chart, the numbers were even stronger. HAL Confidence at 94%. Trend integrity, bullish. HTF, bias, bullish. Continuation, aligned. System ready. Bullish labels stacked through the entire uptrend structure. Long entry zone active. Entry at 30,741, stop at 27,674. 94%. That's the highest confidence reading across any instrument today. The system was maximally convicted on Nasdaq going into this morning. And when the Iran strike hit and markets sold off to a 5-week low, the daily stayed at 94% bullish. It did not flinch. That's the signal versus noise distinction in practice. The geopolitical event was the noise. The trend structure was the signal. At 94% confidence, the system was telling you, the trend is intact. This is a flush, not a reversal. In a On the Nasdaq 1-hour chart, HAL Confidence was at 72% during the correction. But trend integrity stayed bullish. HTF bias stayed bullish. The system showed long entry zone. Entry at 29,457, stop at 28,060. Then, as CENTCOM declared the strikes over and the relief rally kicked in, the system confirmed with system ready. Bullish labels firing directly into the move. The 1-hour caught what the daily had been saying the whole time. The trend is up, the flush created the entry, and the continuation was next. Nasdaq closed up 887 points on the day, over 3%. Traders who sold into the Iran panic missed the entire move. The system was positioned the whole time. Section 6. Gold. MGC all time frames. NAR 915 to Salam Bareth. Now here's where the story gets even more interesting. Gold is up 2.48% today. On the surface, that makes sense. When geopolitical risk spikes, gold gets a safe haven bid. Iran strikes. Traders buy gold. That's the standard playbook. But look at what the trend-following system is saying about gold across every single time frame right now. On the daily, MGC, micro gold futures, HAL Confidence is 84%. Trend integrity, bearish. HTF bias, bearish. Short entry zone active. The system has been stacking system ready. Bearish labels through the entire decline from the highs. Drop to the 4-hour. HAL Confidence 87%. Trend. Integrity, bearish. HTF bias, bearish. Multiple system. Ready. Bearish signals cascading in sequence. Short entry zone, marked. Entry at 42.35, stop at 43.79. The system caught the 4-hour breakdown and has been tracking the move lower. On the 1-hour, HAL Confidence sits at 68%. Lower, because the geopolitical bid is creating intraday noise. But trend integrity, bearish. HTF bias, bearish. Continuation. Active labels confirming the structural trend is still intact. Here's the key distinction. Today's gold rally is a geopolitical reaction. The system's bearish red is a structural trend call. These are two different layers of analysis. Today's 2.5% bounce is noise against the structural trend. The system is saying, wait. The setup on the short side is still developing. Don't chase the safe haven bid. Let the structure come to you. That's discipline. And that's exactly what separates reactive trading from system trading. So what does today actually teach us? Most traders woke up to Iran strike headlines and made a decision in the first 5 minutes. They sold, or they froze, or they chased oil and gold. The trend-following system by Black Bear Trailing had a different answer. HAL 94% bullish on Nasdaq. HAL 91% on S&P. Holding, waiting, confident. The system was built for exactly this. Geopolitical shocks happen. Fed surprises happen. Earnings misses happen. Most traders react to the event. The system reads the structure, and structure tells you whether the event changes the trend or whether it's a temporary flush that creates a better entry. Today was a flush that created a better entry. At 91 and 94% confidence, the system said so before the session even started. By the close, the move confirmed it. This is what disciplined trend following looks like in live market conditions, not a backtest, not a simulation. Today, with Iran strikes, PPI data, and a 3% Nasdaq rally all happening in the same session. If this analysis is useful to you, subscribe to Black Bear Trading. New market breakdowns every week using the trend following system. Hit subscribe and turn on notifications so you never miss the next one. This is Black Bear Trading. Stay disciplined. Enda Fusus Aura Shroud Nano Sei Arsai Santizaur. Or Opera EU Map. Reference for production cues. Brawl View Sinus. Miss. Shows morning dip, sauce, afternoon rip, hook visual. 0, source 0, 2, 45, brawl 0, 1, mess 1, 1D, daily bullish, HAL 91%, system never flinched. 245, 445, brawl 02, mess 4H, correction phase, HAL 7% bearish. 445, 30, brawl 03, mess Inch, reversal confirmed, long entry zone. 536, 15, brawl, war 4, MNQ1, 1D, Nasdaq daily, HAL 94% peak conviction. 615, 8 or brawl mo, MNQ. H, caught the rally, system ready. Bullish fires. 8 tier 915 brawl MOS, MG 1D. Gold daily, HAL 84% bearish, short setup. 915 955 brawl 07, MG C1. 4H gold, 4H. HAL 87% bearish, cascade signals. 955 10 35 brawl 08, MG. Yapor Yunch gold 1H, HAL 6 Ren continuation active. 10 3 Bavariya sound, adjusted to narration. Brawl 09, subscribe end card, custom EP6, generated. 11:36, 12:12.